think a couple of the things that Jay said are so important. I mean, that information, it's really critical that we provide access to opportunities for investors. And I would argue that it wasn't just the SEC where the retail investor is frustrated. I think they feel like the system is rigged against them on a number of fronts. And so whether they are blaming hedge funds or blaming hedge funds, blaming hedge funds or other elements. And so we want to make sure that that access is open to them, that they have information.
Our next guest says the current market structure is broken and retail traders are getting a raw deal. There's no transparency of the order flow. There's no transparency.
That trend is growing. It's distressing. It also means that people are probably paying more for their trades. And as I said earlier, the proliferation of information is the best thing that ever happened to not just retail, but to institutions too. I mean, let's be clear. It used to be that the only guys that had the pricing insight were the guys making the prices. Your point about execution is going on away from exchanges, and is that misleading investors as to actual real price discovery? Of course it is. 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 Of course it is.
Those percentages are much greater in terms of the difference off exchange and the difference and the amount on exchange. Much more in terms of a higher percentage is directed off exchange. Guy, do you think that this is problematic? I mean, to the retail investor, it might look like there's two sets of prices or there's two systems in place.
Yeah, it's fascinating. I really don't know how to answer that. I'd be curious to hear what the regulators say, but I'll say this, to think any of these situations have just been your run-of-the-mill short squeezes, I don't think that's really, I think it's a bit of a false narrative. False narrative. False narrative. A few billion shares cover their positions. Highly levered derivative positions take place off exchange. These guys and gals have intuitively understood that goes on, and they're taking advantage of it, which is the point I've been making all along. Make a lot of money, make a lot of money, make a lot of money, make a lot of money. Fascinating set of circumstances that have literally taken place over the last 6 to 9 months.
Let's bring in Dave Lauer. He's a former high-frequency trader at Citadel. He is now CEO of Urban AI. Dave, great to have you with us.
Thank you so much, Melissa, for having me on. It's a real treat.
Why a raw deal? What about the deal is raw?
Well, there's a lot about our current market structure that's overly complex. And if you ask any regulator, they will tell you that this is not the market structure you would design if you were starting from scratch. And it's something that's been layered on year after year, decade after decade. And frankly, the point that we've gotten to is one in which a lot of incumbents have been able to structure it exactly how they want it to be structured because they're making a lot of money and they are able to wield a lot of political power. And I think we've really lost sight of the two primary purposes for markets, which is price discovery and capital formation. And price discovery is so critical, and that happens mainly on stock exchanges. It's costing the retail investors money who are trading through their brokers, and it's costing pension plans and mutual funds money. By some estimates, 25% or more is how much wider the spread is than if all of those retail orders were to make it to the exchange. So if they're trading against a wider spread that's 25% too wide, artificially widened, that's costing pension plans money. That's costing mutual fund companies money. That's where retail truly has all of its wealth. And I think that's a big problem.
Raw deal pay more. Raw deal pay more. Raw deal pay more. Antiquated system.
Yeah, that's right. And when you have the internalizers in a de facto duopoly, you have other issues around corporate concentration of power and antitrust. And Gary Gensler has said exactly that in his congressional testimony when he was becoming SEC chair and in his first testimony. This is an issue that I think is going to get a lot of attention. The electronification of markets has been an incredible trend for everybody. I would never say, I would never accuse anybody specifically of manipulating markets or anything like that. But I think that having that kind of information is suboptimal for markets. having that concentration of information is not where we want to be. I believe in open and free competition for order flow. And I believe if you send all of those retail orders to lit exchanges, you would compress spreads for everybody, and those retail orders would get just as good, if not better, execution because of competition, which is something that if you're in markets, you'd think you would support, just completely free and open competition.
Dave, great to speak with you. Thank you.
Thank you for having me. I appreciate it.